We're going to have quick lecture. Are credit cards bad? Yes. High interest rates, credit, can fall into debt, credit damage, fees, fine print, potential to overspend, high costs, interest changes, minimum payments create false security, overspending, debt, confusing credit card terms, deferred interest, fraud, and rates can rise on unpaid balances. And it's not your money. It is not your money. What? So? Ever? Why are debit cards due? Budgeting, convenience, security, charges. How do debit cards work? No debt, secure transactions, fees, wallet. And they're your own money. You have your own. Let's go to CVS Pharmacy. Are credit cards bad? No, credit cards are merely tools in a personal finance kit, and like any tool, they can be beneficial for certain jobs, or destructive if misused. Let's get this out of the way. Credit cards aren't inherently bad. They're simply financial products that allow you to make purchases without having the cash on hand right away. Still, according to a NerdWallet survey, nearly 1 in 10 Americans, 9%, think credit cards are evil. After all, they charge high interest rates and allow you to keep spending even when you're already in debt, which can lock you in a seemingly endless cycle of owing money. And while credit cards themselves are not bad, credit card debt certainly can be. That's why it's so important to understand how credit cards work and how to use them properly. When you wield them responsibly, they can be valuable, convenient tools that confer several benefits. The benefits of credit cards: easy, convenient purchases. Carrying a credit card means you always have a payment method on hand, without having to locate an ATM. And if you're making a major, expensive purchase, your credit card essentially fronts the cost for a few weeks. True, debit cards have a convenience factor too, but they don't help you build credit. They typically don't earn rewards, and they may leave you more exposed if you become a victim of fraud. Why nearly every purchase should be on a credit card. The ability to build credit history. Applying for a credit card takes minutes, and using the card responsibly, see tips on how to do that below, can help you establish or rebuild your credit history. Good or excellent credit, corresponding to FICO scores of 690 to 850, can make you more likely to qualify for a wider variety of credit cards, especially those offering premium perks. But good credit also unlocks a lot of other doors. It can help you qualify for lower interest rates on mortgages and other loans, saving you money. Landlords and utility companies also consider credit scores when reviewing your application for a rental home, or determining whether you can get access to utilities without having to put down a deposit. Using a credit card to build your credit. Valuable perks and rewards. Cashback and travel rewards. Credit cards can make every purchase more valuable. These rewards cards earn points and miles that you can redeem for cash, usually in the form of a statement credit or a direct deposit to a bank account, or discounted travel. Some cards offer additional benefits, like a statement credit covering the cost of TSA pre-check or global entry, free checked bags when you fly, hotel room upgrades, airport lounge access, discounts at select merchants, and more. All told, the value of these extras can add up to hundreds of dollars. How to choose a rewards credit card. Protection for purchases and travel bookings. Some cards will reimburse you if a purchase gets lost during shipping, arrives broken, or if the merchant won't accept a return. They may also add an extra year to the manufacturer's warranty, and some travel cards offer trip cancellation and delay coverage, reimbursement for lost baggage, rental car insurance, roadside assistance, and more. Keep in mind that to get these protections, you must use the card to make the purchase. Simply carrying the card and using a different one at checkout won't provide coverage. Unlock savings with these credit card side benefits. Quick reimbursement for fraudulent charges. If you notice something fishy on your statement and report it to your credit card company, you'll get your money back quickly. By law, you're not liable for more than $50 when someone makes a fraudulent charge on your card. But many cards go further than that and offer $0 liability. With debit cards, you can get your money back for suspicious charges, but the longer it takes for you to notice and report a theft, the more liable you may be for the stolen funds. Plus, fraudulent charges on a debit card mean the cash is withdrawn directly from your bank account. How to prevent credit card fraud. The drawbacks of credit cards' high interest rates. According to the Federal Reserve, the average annual percentage rate for credit cards that incurred interest was 16.43% in the third quarter of 2020. Put another way, if your credit card charges that interest rate on a $10,000 debt and you make $150 monthly payments toward that debt, you'll spend $16,906 in interest on top of the $10,000 you owe. See our credit card payoff calculator here. But if you don't carry a balance, that is, if you pay your bill in full and on time every month, then a card's APR is irrelevant. You won't incur a dime of interest. What is a good APR for a credit card? The ability to add on to existing debt. Most credit cards offer a revolving line of credit. That means that during each billing cycle, you can charge up to your credit limit, but you only have to pay back a small portion of that total. Once you do, you're free to spend up to your credit limit again, while the remaining balance from the previous billing cycle accrues interest. Do that a few months in a row, and your credit card debt will grow quickly. This feature does grant you flexibility when you're in a financial bind. There may be months where all you can afford is the minimum payment, and still having access to your full credit limit can be a lifeline when you're experiencing hardships. But it also makes it easy to get deeper and deeper into high-interest debt. 7 Credit card rules you can break in an emergency. Potentially confusing terms and conditions. Rewards may expire after a few years, or not. If you miss a payment, you may be subject to a higher penalty APR for an undefined period of time. If you redeem points for travel, they may be worth 1 cent each, but if you redeem for a gift card, maybe they're worth only 0.5 to 0.75 cent apiece, depending on the merchant and, seemingly, the phases of the moon. It can be tough to memorize the terms and conditions of the cards you carry, and the more cards you carry, the more complicated this can get. You can access the fine print for credit cards, whether you already have the card or not, on the card's website. Yes, this can feel like homework, but it'll help you truly understand how your card works, and sometimes, a valuable perk that isn't otherwise advertised is hidden in that fine print. Decode your credit card's fine print like a pro. How to use credit cards responsibly. Pay every credit card bill on time, and ideally in full. 2. If you miss a credit card payment, you may be subject to a late fee and a serious sting to your credit scores. Making on-time payments of at least the minimum amount due will keep your account in good standing, which helps build a positive credit history over time. If you can afford to pay every credit card bill in full, you'll avoid carrying a balance and paying interest. NerdWallet's Guide to Your First Credit Card. Try not to use too much of your credit limit. Your credit utilization, or the percentage of your total credit limit that you charge each billing cycle, has an impact on your credit scores. We recommend you charge no more than 30% of your credit limit each month. What factors affect your credit scores? Keep credit card accounts open for a long time. You may not want to hold on to a card you never use, especially if it charges an annual fee, but an older average age of credit card accounts is good for your credit scores. Check with your card issuer to see whether downgrading to a no-fee version of the card is possible so you can cut out the annual expense while preserving your account history. Then, put a small recurring charge on that card to keep the account active, like a streaming service subscription, and set up auto pay so the bill is paid in full each month. Otherwise, if you don't use a card for a long time, the issuer may close it, which can also affect your credit scores. Unwanted credit card? Request a product change. According to findings from the Federal Reserve Bank of San Francisco's Diary of Consumer Payment Choice, Consumers use debit cards for 28% of payments and credit cards for 27% of payments in 2020. For 19% of transactions, consumers used cash. This data suggests that debit cards and credit cards are used at a similar rate. As a consumer, how do you know when to use one over the other? Compared to cash, both credit and debit cards offer better expense monitoring and make online purchases easier. However, each has distinct advantages and disadvantages. In this article, we list the pros and cons of debit cards and the pros and cons of credit cards, so you can use each wisely. What's the difference between debit and credit cards? Both debit and credit cards allow you to make purchases and cash withdrawals, but there are a few key distinctions. The main difference between debit and credit cards comes down to how each payment method works. When you make a purchase with your debit card, the purchase amount is immediately withdrawn from your checking account. Credit cards work a little differently. Instead of immediately withdrawing funds from your checking account, you borrow money from your credit card company whenever you make a purchase. With debit cards, you don't need to worry about receiving a monthly bill, since your purchases are automatically taken out of your bank account. However, when you use a credit card, you will receive a monthly statement outlining your credit card balance. You have the option to pay the minimum amount, pay your balance in full, or pay anything between the minimum and full amount. But, you'll accrue interest if you carry a balance month to month. If you pay your balance on time and in full, you avoid interest and late fees. Next, we'll dig into the pros and cons of debit and credit cards so you can use each to your advantage. Related reading: How do credit cards work? Pros and cons of debit cards. The pros and cons of debit cards can help you better understand what situations they're beneficial for and when a credit card might be a better option. In most cases, a debit card is a good choice when you want a convenient way to get cash out of your checking account or pay for purchases in full. Since these purchases withdraw funds from your account immediately, debit cards may be a good way to ensure you don't spend more than you have. However, debit card transactions may cause overdraft fees and have limited fraud protection. Read more about debit card advantages and disadvantages below. Pros of debit cards. Here are some pros of debit cards. They're highly convenient. They're faster than writing a check and are widely accepted by retailers. Debit cards are especially convenient if you need to withdraw cash from an ATM or want to get cash back when you make a purchase at a store. They typically don't have any annual fees. Even if you use your debit card minimally, you won't pay to keep it activated. Your checking account, however, may carry monthly fees. They can help with budgeting by discouraging excess spending. Because money is immediately withdrawn from your checking account when you make purchases, a debit card can help you keep track of your spending. Using a debit card may prevent you from making large, impulse purchases that you can't afford. They don't charge interest. Since debit card payments take money out of your account right away, you don't accumulate a balance that you have to pay interest on. This is a key difference between a credit card and debit card. Cons of debit cards. Here are some cons of debit cards. They have limited fraud protection. According to the Federal Trade Commission, if your debit card is stolen and you notify your bank within 2 days, you could be responsible for up to $50 of any fraudulent charges. If you notify your bank after 2 business days, you might be responsible for up to $500 of the fraudulent charges. Notifying your bank after 60 days means you could be liable for all of the fraudulent charges. Because debit cards typically have less fraud protection than credit cards, it's best not to use your debit card for online purchases. Your spending limit depends on your checking account balance. A debit card is a good option for smaller purchases, but it's not the best option for large expenses that exceed your account balance or that you'd rather pay off over time. While it's ideal to budget for large expenses, a credit card is another way to help you afford them. They may cause overdraft fees. With a debit card, it's possible to overdraw funds from your account if you don't keep close tabs on your checking account balance. Overdraft consent enables these transactions to occur by charging a fee. You can opt out of overdraft consent, But this means your debit card will be declined for purchases you can't afford. They don't build your credit score. Since debit cards are directly linked to your checking account, they don't affect your credit score. If you're looking to build your credit history, debit cards won't help. Pros and cons of credit cards. Credit cards offer many advantages, including cashback rewards and strong fraud protection. They can also be used to finance large purchases. If you're looking to build your credit history, getting a credit card could be a great option. However, there are also a few disadvantages of credit cards. Carrying a large balance can lead to interest accumulation and hefty payments you might not be able to afford. Using a credit card calculator can help you understand just how long it might take to pay off a purchase depending on your budget and your card's interest rate. Learn more about credit card advantages and disadvantages below. Pros of credit cards. Here are some pros of credit cards. They offer short-term financing. Since you don't immediately pay for your credit card purchases, credit cards offer short-term financing. This is beneficial in emergency situations or when you want to pay down a larger purchase over time. However, be wary of the interest you'll pay when you don't pay your balance in full each month. Learn about other financing options, like a personal loan versus personal line of credit. They can build your credit history. Making credit card payments on time helps you establish a credit history and improves your credit score. Your credit score is an important factor in taking out a car loan or mortgage. A good credit score can also help you secure a better interest rate for these purchases. This is a big difference between debit and credit cards, as debit cards don't affect your credit score. They may offer cashback or rewards programs. This is one of the biggest perks of credit cards. Some credit cards offer more cashback rewards for certain purchases, such as those related to airfare, gas or entertainment. They offer better fraud protection. The Federal Trade Commission explains that thanks to the Fair Credit Billing Act, your liability for any fraudulent charges made on your credit card is capped at $50. Since credit card purchases don't immediately withdraw funds from your checking account, this may add another layer of fraud protection. Related reading: 7 Common Credit Card Myths and Facts. Cons of credit cards. Here are some cons of credit cards. There's a danger of spending more than you can afford. A credit card has a set limit, but it might be more than what your budget allows. Because you have the option of carrying a balance on your credit card each month, it might be easy for your spending to get out of control. If this goes on for too long, your credit card debt might become overwhelming. You pay interest when you carry a balance. If you don't pay your credit card balance in full each month, you'll pay interest on your unpaid balance. As the amount of interest you owe increases, it can become more difficult to pay off your principal balance. Late payment fees can stack up. If you miss a credit card payment, the fee can be costly. Making a habit of this can be damaging to your finances and credit rating. They can hurt your credit score. Just as credit cards can help build your credit rating, they can also damage your credit if used poorly. It's important to make payments on time and ensure you can make the minimum required monthly payment. If not, your credit score could go down. Debit versus credit cards. When to use each. Knowing when to use credit or debit cards can be confusing. By taking into account the pros and cons of credit and debit cards, you can make an informed decision about which option is best suited for specific circumstances. Debit versus credit cards. When to use each. Knowing when to use credit or debit cards can be confusing. By taking into account the pros and cons of credit and debit cards, you can make an informed decision about which option is best suited for specific circumstances. Debit cards. Credit cards. Pros: convenient and widely accepted. No annual fees can help with budgeting. Interest-free short-term financing option can build your credit history. May offer cashback rewards. Strong fraud protection. Cons: limited fraud protection. Spending limit depends on checking account balance. Possible overdraft fees don't build your credit. Danger of overspending. Interest payments. Late payment fees can hurt your credit score. When to use debit cards. Debit cards are ideal for everyday purchases, like a lunch at the office or buying groceries on your way home from work. With these smaller purchases, You can easily track your spending and ensure that you have enough money in your checking account to cover the transactions. Since you can't spend more than you have, debit cards can also be a helpful way to build strong spending habits. If knowing you can carry a balance on a credit card will make you more likely to overspend, you may be better off using a debit card versus using a credit card. Debit cards are also a convenient way to withdraw cash from your account or get cash back during a transaction when ATMs aren't available. When to use credit cards. A big difference between debit and credit cards is that debit cards don't affect your credit score. When used properly, credit cards can be a helpful way to build credit. If you trust yourself to spend wisely and consistently make on-time payments, they're a great option. They also offer strong fraud protection, which is especially useful when making online purchases. Poor credit card use, on the other hand, is bad news. While you can use credit cards to finance large expenses that you want to pay off over time, it's essential not to make a habit of carrying a credit card balance. It's best to pay your credit card balance in full and on time every month so you avoid paying extra interest and fees. Read more about personal finance. Whether you'll want to use your credit or debit card for a purchase depends on what your spending habits are and what type of purchase you are making. While there are many differences between debit and credit cards, each can be beneficial when used strategically. For that reason, it may be a good idea to have both a credit card and debit card available for your day-to-day purchases. Check out Cadence Bank's personal debit cards, available at no extra charge with your personal checking account, and personal credit cards. If you want to learn more about personal finance, take a look at our other articles and insights. From savings to mortgages, these articles cover a variety of topics to help you make well-informed financial decisions. Still have questions about when to use credit cards versus debit cards? Get in touch with a Cadence Bank personal banker. Our team of professionals are happy to provide personalized advice based on your specific financial situation. If you just want to shop and buy, go ahead. I don't care.
Yeah, 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 yeah,